It's Brian Preston, the Money Guy.
How about one from Kevin? Oh, this is a good one. Kevin said, for someone leaving a public service position with a 457, does it make sense to leave the money here instead of rolling it over to utilize for early retirement in lieu of a taxable bridge account? Maybe perhaps, Brian, talk a little bit about what makes 457s kind of unique, and should you have sort of a different like litmus test that you go through when you decide what to do with that fund if you're leaving employment going somewhere else?
For sure. I mean, and this is, and look, I think the government's trying to really be proactive on this. I know when we get SEC guidance and other things, they want to make sure when you're moving assets between qualified accounts that you understand your why, because there's a lot of decisions that every individual needs to make. Because I think there were years in the investment industry where it was just like, hey, when you leave your employer, roll it over into an IRA, and that's always going to be the best practice. That's not always the case. You have to kind of go through things. And 457s are even more unique than 401ks or 403bs because, and I've shared this before, but 457s don't have the early withdrawal penalty.
That's right.
A lot of, like your IRAs, 59.5 is when you get access to them, is the age requirement. For 401ks, after separation of service, it's around 55. Now, look, for the nerdy trolls, I know we can annuitize some of these IRA accounts and other things. There are workarounds to this, but they're much more complex. In generalities, though, those are the rules. 59.5 for IRAs, 55 if you've separated service. 457s don't. It's a different code section. That's why you see a lot of government employees. You see public, you see police officers, firefighters, others will have these type of structures. So you do need to that's a value. I mean, that is definitely a benefit, especially if you're part of the FIRE movement. You want to be retiring early. Having a 457 is a part of your toolbox or planning tools is a really powerful thing. So then after you figure out how does this fit into my financial life, you also then have to say, well, there's other factors too. And the fact that is my employer, is this government, is this a good investment plan?
Yeah.
I mean, because
they're not all created equal.
Is the only investment option in this is like an annuity that pays 3%, or is this give me a broad section of index funds and other things that's valuable that goes into play? You have to really take into account all the different factors to figure out what's the perfect solution for you.
Now, Kevin, you specifically mentioned early retirement. I love the fact that 457s don't have this early withdrawal 10% penalty similar to what other retirement accounts have. However, you do still have to pay income tax on distribution. So keep that in mind. If you are planning on checking out at 45, 50, 52, 53, whatever the number is, every dollar you want to pull out of that's going to be somewhat expensive. You're going to pay your federal rate on that. And if you live in a state with state income tax and no exclusions, you're going to pay a state income tax on that as well. So I do like the idea, follow the financial order of operations, follow the FOO so that you can start building that taxable bridge account, that, step 7. If you haven't seen that yet, go to moneyguide.com/resources. You can check out our free deliverable. If you want to do a deep dive where we actually do talk about specific retirement plans, go check out our course at learn.moneyguide.com. I really like the idea of even early retirees having these 3 buckets built up, because what you want to do is when you actually get to financial independence, one of the things that makes you independent is being able to control your tax situation. We have no idea what taxes are going to be in the future. We're going to be in a high tax environment. We're going to be in a low tax environment. But what we do know is if you have 3 different account types that are all taxed differently, you can pick and choose where you pull your money out of each, which does put the control back in your hands of your financial security in retirement. So I like seeing all 3 buckets built up if you can do that.
I'd be curious to know from the audience, checking out, does that equate to retirement or death?
Oh, did I say checking out?
You said checking out. I was like, Bo just took this in a different direction than I want, but you were meaning retired.
I meant retired, not early death. That's
and
awesome.
That's true. We know most financial, FIRE people, all you have to do is go look on Twitter, YouTube, or anything. They don't actually retire. They retire to become content creators.